Good afternoon, everybody. This is Dan Lopez for episode number 3 of Lunch with Local Legends. I'm here with one of my favorite insurance brokers in the Lake Mary area, Jackie Berson of LRA Insurance. How you doing, Jackie?
Very well, Dan. Thank you.
We had a little bit of technical difficulties here. Sorry for us starting late. And that's why we got the smaller screen. I had to use the backup, and we're doing it on the phone. But the important part is you can still see Jackie. Not so much important.
And Dan.
And you can see the company that Jackie works for. So thank you very much, everybody, for joining us. And Jackie, why don't you tell us a little bit about yourself?
Thanks, Dan. Jackie Berson with LRA Insurance. We're a mid-size, family-owned insurance agency. We're independent agents. Therefore, we're able to shop all your insurance policies with many different carriers.
Outstanding. Okay. So, how long have you been working in the insurance business? I feel like I've known you for many years now.
I feel the same way, and it's always been so nice to see you develop and grow your business. But I've been in the business for going on 17 years now.
17 years?
I know, it's so long. It sounds long, but it doesn't seem that long to me because I just love what I do.
Wow. Okay. Well, tell me why. I mean, what is it about selling homeowners insurance that you love so much?
It's actually a lot like what you do, Dan. It's really just helping people achieve their goals. It's not as exciting as buying a home, but being able to save on your insurance, having someone that you know in the business that is available for any questions that you might need. That's something I really pride myself in, just being available to my clients.
Okay. Outstanding. Well, when you and I usually get together, it's at the start of somebody getting ready to purchase a home. So, when would you recommend that somebody reaches out to you in order to start shopping for homeowners insurance?
Really, the best time to start shopping for your homeowners insurance is right when you found that home and Dan has negotiated that contract to purchase it, and now it's the next step. I'm very well aware that the contract for sale and purchase, Dan, includes a clause in there about the home having to be insurable.
Right.
In addition to that, I know that you're also going to include a time frame in which to do your home inspections to make sure it's a home that's in good condition, or if there's anything that you need to know in advance.
Right.
So that's where I come in. I want to make sure that that home is going to be insurable and that there are no issues with that home that might keep you from being able to get insurance. Now, I will say that in the 17 years that I've been doing this, I've yet to turn somebody away because we can't insure them. That's the beauty of working with an independent agent like myself. We have a lot of resources. And, we're not afraid to get on the phone with an underwriter and speak to them and advocate for you to make sure that you get the proper coverage and have them write that policy. So it's something that we pride ourselves in doing. Excuse me.
Well, that's incredibly important what you just touched on there about being able to find coverage for our customers. Because I can't tell you how many times I'm working with a buyer, or even if I'm on the seller's side, and I hear from the other agent, the representing agent, that their insurance broker is saying that the house is uninsurable. Meanwhile, obviously, the house currently has insurance on it. So how can a property become uninsurable? Yet whenever I reach out to you and you have a simple conversation with the customer, you're able to find them really good coverage.
Absolutely. When you put me in contact with your clients, just like when you speak to them initially, you do qualify them to make sure that they're able to purchase that home. It's great that you mentioned that I have a small conversation with your client. It's really important. I need to qualify them, and the home needs to qualify as well for insurance. So when I speak to your client, when I qualify them, I ask them questions about their background. If they've owned a home before, have they had any insurance claims? Do they own any pets? Because sometimes these insurance companies need to know if you have a certain dog breed that they may not really want on the premises. And then that doesn't mean that I can't find you insurance. It just means that it helps me navigate better for you, so that when I offer you a quote, you can run with it. So questions like that, if you've had a bankruptcy or a foreclosure in the past, knowing those things helps you. Don't look at it as an obstacle, but rather just letting me know so I know exactly how to help you. And then with regard to the home, Dan, there are certain materials in a home that some insurance agencies object to. So knowing that they exist in the home is really important so that, again, I can offer you quotes that you won't have an issue with. Materials such as polybutylene piping or certain aluminum wiring. Sometimes the roofs are over 20 years old. People truly believe, and I can understand that if it ain't broke, why fix it? So it's really just a matter of understanding what I'm dealing with so that I'm able to help. But I gotta tell you, I did a presentation a few days ago, and one of the presenters was an inspector, and he was presenting and saying things like, if you've got polybutylene in that home, no insurance company will insure that. I just went like, don't say it, but I have to say it. Not true, not factual. He just may not know. And so it was great to connect with him because now he can't say something like that. Mm-hmm. He also commented on Federal Pacific boxes, Sylvania boxes, Zinsco, over 20-year-old roofs. I said, no, you're talking to the wrong person. So here I am to tell you that we can find solutions for those situations, and even if it's just to get you through closing, and Dan's a terrific negotiator, so he, knowing that these things are obstacles or might keep you from getting competitive pricing or something that is in your favor, he can go back to that seller and negotiate for you to make those repairs or improvements, and whether we can have it done before closing or after closing, I'm here to work with you on that. I don't have a problem picking up a phone and talking to the underwriter and getting a special exception for that. Our agency has been around since 1987, so we have really great relationships with our underwriters, and they know that we follow up on everything. So they are very quick to work with us on things like that.
Outstanding. Well, let's drill it down a little bit. You mentioned polybutylene piping. I know you're not an inspector, you're not a general contractor, but from an insurance standpoint, briefly to talk about what that is and how that might affect somebody who's purchasing a home that has existing polybutylene piping.
Sure. Polybutylene piping actually came into play in constructing homes in the mid to late 80s, and they kind of stopped using it in 92, beginning of 93. So my understanding is I've actually, because I am not an inspector and I'm not a plumber, I actually went to a couple of different prominent plumbing companies, and I sat down with some of their experts and I asked them to explain to me what it causes the fault. So what they tried to explain is that there were several generations of polybutylene plumbing. The insurance company doesn't care what generation it is, unfortunately, okay? But they did, like anything else, improve on it with time, but at the end, they just figured, let's just find a different material. So the initial issues they had were with the fittings, actually, not the actual plumbing. So there were leaks, there were failures in the fittings, and so that's what was causing the damage. Then later on, that material is poured and formed, and some of those forms were not consistent throughout the material. So because it is pliable, there are times when it was bent maybe a little too much, and some of those weaker spots in that material failed or just gave out, and then there was a leak there as well. So really, the insurance companies have just basically said, forget it. It exists. We're either going to take it or not. Some companies will say, we don't mind it being there, and we can either choose to not offer you water damage coverage at all, or we'll offer you up to $10,000 worth of water damage coverage. Now, some companies will have you provide a plumber's inspection to be able to get that $10,000 into your policy. Some companies will say it doesn't matter. If there's a claim, we'll pay it. Up to $10,000 is the limit. Now, keep in mind, why I would recommend to get that material replaced is if you have a claim for water and it stems from that poly, the insurance company, if you're insured for it, will cover you, and then they'll require you to update that material, because why would they want to continue insuring a home that obviously has faulty plumbing? Sure. So they'll pay the claim, and then they'll require you to replace that plumbing.
So many times it does make sense to go ahead and have the property replumbed prior to the closing, if it can be negotiated in that way.
Absolutely, Dan.
However, for some reason, if they can't, then their insurance coverage is still an option.
Absolutely, and like I said, we can pick up the phone, call the underwriter, and say, look, Dan has negotiated X amount of dollars to get that plumbing replaced, but we're close to closing date, so we don't want to delay this closing. Can we get an exception, let's say 30 days, to get that out of the property after closing? And I'm telling you, very, very more often than not, they say yes.
Okay, outstanding. All right, so let's talk about electrical panels then. That's becoming seems to be a hot ticket item anymore.
Yes.
You seeing that more and more?
Electrical panels, that's one thing that I really, first of all, we can insure them all. So no worries at all to get you to closing. If you decide to change it, fine. If you don't, fine too.
See, that's why I like her so much, because she says we can insure them all. I can't tell you how many times you hear that this property is uninsurable.
It is insurable. Honestly, Dan, it really has to do with how much that agent wants to do that business. You know, right. When you call me and when your clients call me, the way I think of that phone call is I have two clients. Right? It's not just the person that I'm quoting that policy for. Mm-hmm. You're also my client because you recommended me and you are putting that person in my hands. So I really value that and I take it very seriously. So that's why I say me and my staff, we have servant hearts. Okay. We are prepared to do whatever it takes to help you achieve your goals. And so again, pick up the phone, ask for a special allowance. And they very rarely say no to us. So going back to the Federal Pacific, Sylvania, and Zinsco panels, those are the ones that are what they call red flagged. Okay, yep. So your inspector will probably bring that to your attention if they spot it on the premises. And it's really just a matter of how the buyer would like to approach it and how Dan would like to address it on behalf of his buyer. So to get them out of, I would recommend to get those out as soon as possible. It's not something that might fail. It's just a matter of when, okay? And it is a fire hazard. Right. So that's why a lot of these insurance companies really object to it because they know it's not a matter of if, it's a matter of when. So as soon as you can get those replaced, do it, please. But to get to the closing, we can certainly get that property insured. And some of them may say, we'll give you to 30 days after closing, but we want it out. And some will say, we'll take it. But sometimes the insurance coverage for homes that have these materials can be a little more expensive because whether they may not be penalizing you for having that, but what happens is, let's say, I've got over 40 A-rated companies that I work with, Dan. So what happens is instead of you being able to get insured by 40 companies, now because you've got polybutylene in the home, now we're narrowing it down to 6. And then now you want $10,000 worth of damage. Now we're narrowing it down to maybe 3. So the fewer options you have, unfortunately, the less competitive the pricing becomes.
And we like to see options. One of the services that Jackie offers that I really like to see, what I really appreciate is that when she talks to our customers and she gives them quotes, your turnaround, you provide them with 3 or more quotes from A-rated insurance carriers.
That's correct.
And then she even takes the time and she'll go over with you the differences, the pros and cons with each policy. In fact, I was just talking with Jackie last week in regards to changing out one of my own personal properties with new insurance, and she did exactly that. She's been doing it that way for years. Other people in the business definitely take a page out of her book on that because it's an incredible service.
Thank you, Dan. That's what I pride myself in. But just touching back on the 4-point inspection too. 4-point inspections are strictly for insurance purposes. Nobody else cares about a 4-point inspection except an insurance underwriter.
So what is a 4-point inspection?
A 4-point inspection is an inspection that is usually required when a home is over 30 years old. Some carriers will do their own, but frankly, that might sound like a good thing because you don't have to pay for a 4-point inspection. But then they're going to inspect it after you buy your home. And if these issues pop up after you bought the home, now that issue is your baby. So I don't want it to be your baby. Let's take care of that baby before you close, or at least address it in one way so that you are not stuck with the bill for having to improve those. Now, one of the habits that these insurance companies have is when they do their own 4-point inspection and you didn't do your own on a home over 30 years old, they're going to be a lot more particular. And if there's something that they do to say, Well, guess what? They're going to send you exactly what that you need to improve on that home. You're going to have to address it, and right behind that is a letter of cancellation. So, and it's really not that they want to be your enemy or they hate you or right back at you.
It's about accountability.
It's about accountability and the fact that they need to put you on notice, okay? And they're required to put you on notice. There's certain time frames that they're required to act within. So they automatically do it after they send you some, notice that there's these deficiencies in the home. So that's why I always advocate for getting that 4-point inspection on homes that are 30 years and over, because you want to know what's going on with that home before it's your home. Okay.
So 30 years, is that a moving timeline? So in other words, somebody's looking at this video a year from now. Is it still 30 years or is it now 31 years? How does that work?
It's 30 years.
Okay.
It just moves just like that.
And I got to tell you, that's crazy too. I mean, we talk in 1988. 1988 does not feel like 30 years ago to me.
It doesn't. It's craziness. It's absolute craziness. Now, now that we're touching on inspections too, Dan, there's a really neat inspection out there, as a matter of fact. It's called a wind mitigation inspection. Not all homes qualify for it, but if that home is built before 2002 and it has had a new roof after 2002, by golly, get that wind mitigation inspection, because that thing is going to save you hundreds of dollars on your homeowner's insurance. It is awesome. People, another inspection I have to pay for, but gosh, I always tell them it's probably some of the best money you're going to spend in buying this home. Who doesn't want to save $300-400 on their insurance every year?
$100 investment, you end up paying, saving hundreds of dollars later, in a short period down the line, right?
Exactly, immediately. So get that wind mitigation done if it actually qualifies, and most do. When you in speaking with me, as I get some information and I do some of your due diligence on the home, I'll be able to tell you whether the home qualifies for it and whether it's worthwhile to get that. So no worries. And even if you had your inspection and you didn't ask for your inspector to prepare one for you, most inspectors now are really savvy. They will already have retrieved all the information they needed and just want to know that you want it, and then they'll pull it together. You pay them and they'll release that inspection and we're good to go. One caveat with those wind mitigation inspections I see whenever someone is shopping me with other agents is they'll tell me, hey, do you write with this company and why is their quote so much less? And I said, well, that's a big inconsistency. If you'd like me to do a comparison, I'd be happy to look at that quote. And every time I look at it, it never fails. You have an agent that has applied wind mitigation credits to a quote without getting an inspection report in their hand, and that is a real disservice to the client, Dan, because not every home qualifies for all of the max wind mitigation credits, and that's just kind of a little bait and switch with I'm not really big on. So I really, if there's a permit in public records about the roof being updated after 2002, I am very happy to apply the credit for that. But anything beyond that requires a certified inspector to go into that attic and report and take pictures of those reportings. And so anyone that is applying credits to make their quotes look good for you is just not a good idea. All right?
That's an excellent
I'd hate to disappoint you. I don't want to do that to you and then later on say, hey, guess what? You didn't qualify for this credit. Now it's more expensive. I will never do that to you.
Well, and the good news is right now we're talking about the regular home inspection, we're talking about the wind mitigation inspection, we're talking about the 4-point inspection. If for some reason it made sense to have all three done, you don't need 3 different inspectors going out there and knocking these out.
That's right.
Most of the time, one inspector can knock those out. Sometimes you can even have the WDO inspection done at the same time as well. So
that's great.
Just kind of keep that in mind.
Absolutely, absolutely.
Okay.
The next, one thing I definitely want to touch on, Dan, is I get asked a lot about getting lower deductibles.
Now, we like to save money, sure.
Yeah, well, save money when you have a claim, but
right.
Think about it. How often do you have a claim? Really, when you have a homeowner's insurance policy, you need to think in terms of it being a catastrophic policy, something to protect you truly in a catastrophic situation. Don't think of it as oh my goodness, this happened and I've got insurance for that. Why should I go to Home Depot and pay $300-400 to get that repaired? No, 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 no. Okay, you don't want to do that. In Florida, we've got to love Florida for insurance. We're kind of like a different world. Okay, anything that could possibly happen to a home will happen to it in Florida. But nevertheless, when someone says, I'd like to get as low deductibles as possible, and frankly, if I was someone else, I'd probably say, yay, higher commission for me. The lower the deductible, the higher the cost of the policy. So you're buying down that deductible. Right. But no. I want to protect you against being canceled, being labeled as maybe someone that is frivolously placing claims. Let's have a long-lasting relationship with your insurance company, and of course with me too. So what I'd like to explain to you is that there are 3 major deductibles in a homeowner's insurance policy. One of them is your hurricane deductible. The other one is your all other perils deductible. Sometimes it's labeled on your quotes as a non-hurricane deductible, or the initials AOP for all other perils. And then you have your sinkhole deductible as well. Your hurricane deductible is typically 2% of the dwelling value, or the amount that the home is insured for. That is, you can get higher. Some companies offer lower. Do I recommend lower? Sure, why not? That's not a big deal, but just keep in mind, it will cause your premium to be higher by getting the lower deductibles, but also, most people don't realize, Dan, that hurricane deductibles are annual deductibles. So that means that no matter how many hurricane claims you have in 1 year, you will only have the one-time deductible, okay? So you know that, or maybe you don't know, that hurricane season starts in June and it ends in November. Hey, we're almost out of that.
We did that close.
Yes, we did. Woo, woo. Anyway, so your hurricane deductible is an annual deductible. And what happens with that is if you call me and say, Jax, this past weekend, you know that Hurricane Dan or Tropical Storm Dan that came through here? Well, it knocked down a portion of my gazebo. And I'm going to say, hey, how much do you think it'll cost to get that gazebo replaced? And he said, $25, maybe $3,000, $2,500, maybe $3,000. And I said, well, your hurricane deductible is $5,500 for the year. And I said, but you know what? Let's file that claim because we are in the middle of June. We still have several months to go for the end of hurricane season. So what you're doing is you're eating at that deductible. You won't get any money back from that insurance company for that $2,200 claim, $2,500 claim, but you're working towards that $5,500 total deductible that you have. And the next claim, hopefully you don't have another claim. I wouldn't want anybody to be so unlucky, but at least you're working towards that. Okay, and then you have your all other perils deductible. All other perils deductible is anything that isn't sinkhole or hurricane. All right, now this one is the one where I always try to talk people off the ledge from buying down, because in Florida, every claim that you have that's all other perils that falls under that category counts against you. And so typically what most insurance companies do is they judge you very harshly with those types of claims. So if you have a claim for all other peril deductibles, let's say you had, I tell people, this is an example that I use constantly, is you've just bought a dishwasher and you had the fellas come in and install it, and they didn't, that water line wasn't tightened well enough, and you went off and you came back and there's now a puddle of water on your beautiful hardwood floors, right? But you got back in time, and it was not extensive damage, but you still want to know if it's covered. So you don't call me because your policy will have your carrier's information. You figure, I'm not going to bother Jackie because it's the weekend or it's after hours. I'm just going to call my carrier. So you call the carrier and you speak to them, and you'll say, listen, something happened this weekend. This is what happened. Am I covered? And they'll tell you, yes, you're covered. And you're going to say, you know what? I'm going to think about it, talk to my wife, and see if it's a claim that I want to place. And they'll say, okay, no worries. We're here to help you. Let us know what we can do for you. And so later on, they decide they're not going to file the claim because it turns out they have $1,000 deductible. The damage is $1,800. It's not a good idea to put in a claim for $1,800 when your deductible is $1,000. So 2 years later, they get an insurance increase premium, a premium increase on their insurance policy. They call me to reshop it. Guess what? That appeared as a claim that was not paid, because all these insurance companies, that's their MO. They'll file it as a claim that was not paid even though he decided not to file it ultimately. That's what they do. That's what they do. So just keep that in mind. That's why it's also a good idea to work with someone like me, because I'm your liaison. You can speak to me about anything with regard to your home that has occurred, and whether you're covered, or you want to make changes, whatever. You give me a call and I'm here to help you, and you can bounce things off of me. Ultimately, it's your decision whether you want to file the claim or not, but you don't want to be dinged because you asked a question. So absolutely work with someone, an independent agent like me, because we're that buffer that keeps you from getting those types of claims noted and then you don't know about it.
So what you're saying is that so we can reach out to you anytime, even after the fact. I sign up with insurance for you today. 2 years down the line, something happens. You can be the person that I actually reach out to, not that toll-free number.
Yes, Dan. You can call the toll-free number if you want. Absolutely, it's there so that you have a way to communicate. Also, but the way I do my business is I'm the kind of very hands-on agent. So I mentioned earlier in the program that I want you to feel like you have a friend in the business, that you can call me and ask questions. No dumb questions out there. Insurance policies are not something you deal with every day. So there are absolutely no dumb questions. So I'm here to help you, and I'm very well versed in the policy terms. It's just a few keys on my computer to see where you're at with your policy. If you call me and say I've got a letter here from my insurance carrier and it says that I haven't paid my premium, and I'm in an escrow account, and listen, I'll get on there and I'll see what's going on and I'll get to the bottom of it, and you'll have your answers promptly. And if I can't get it, I've got a staff of 12 people that are just waiting for me to give them something to do.
Outstanding. All right. Well, talk a little bit about flood insurance then. I mean, is flood insurance something that's automatic when you take out a homeowner's insurance policy?
Flood insurance policy, actually your homeowner's insurance policy does cover you for some floods, okay. Not all floods, okay? The one I mentioned earlier about that dishwasher leaking, that would be covered under homeowner's insurance policy for floods, but those are floods that happen from within the home. Okay. So it has to come from inside the home for it to be covered by your homeowner's insurance policy. If you had a flood from water that came in from outdoors, and now the operative term is going to be groundwater, water that comes from outdoors but that hits the ground and rises and invades your home. Okay. That's the kind of claim that would be covered under a separate flood insurance policy. Those are available through the National Flood Insurance Program. We sell those policies. It's a very standardized pricing, so it's not something that you can go off and shop. Now, having said that, the latest is private market companies coming in to sell flood insurance. Now, that's actually a really good thing for us, the consumers, because the coverage, the way the claims are paid is better. Okay. Now, with the National Flood Insurance Program, it's really just a means to an end. Okay. It's basic. It's what you need just to cover you in a catastrophic situation. Even when you purchase personal property coverage through an NFIP program, the national program, it's at depreciated value. So it's really, I always tell people, don't worry about your personal belongings so much, because you can actually move those if you know the flood's coming. It's the home that you can't move. So that's really where the bulk of your coverage should be. But if you're interested in having your personal belongings covered for replacement costs, the NFIP program is probably not the way to go. They pay only depreciated value. Now, with these private market companies, there's some companies out there that have gotten really great. I can endorse your homeowner's insurance policies with some of these carriers for flood insurance, which basically just is an extension that says, okay, so if there happens to be a flood from water that comes in from the outdoors and invades the home, they will be covered, and they just kind of like it becomes one policy with that endorsement, and I love that. It's usually less expensive, but not everybody's offering it. But I have a feeling that they're all going to get on the bandwagon, and that's a great thing. And then, of course, If you wanted to work with a private market standalone flood insurance policy, we can quote those too. We have absolutely fantastic A-rated carriers, and they offer replacement cost on your personal property. I will say that they tend to be a little bit more expensive, but I gotta tell you, I got a lot of expensive things in my home. I love shoes, all right? So I want to make sure that my nice shoes are covered at replacement cost. So I like those private market companies, absolutely, Dan.
Outstanding. All right. So properties that need flood insurance, where it's required, is that something that we should be afraid of?
Often I speak with a lot of agents, and they'll call me and say, Jackie, this home in one of the sites says that it's an AE plane, but the owner doesn't carry any flood insurance. How could that be? Well, AE is really just kind of like a, hey, you should really look into this a little further because it may or may not be. So I always encourage all my realtor partners to call me and let's run a flood zone determination. It's really easy for us to do that, and it's absolutely our pleasure to provide that to you. It's an actual formal document that recognizes that particular home. It knows exactly what plane it is, and if it comes back as an X with an asterisk, that's basically an AE plane. And what that basically means, Dan, is you have a lot, and the maybe it slopes down a little bit towards the back, okay, and you happen to have a retention area or a pond or a lake, whatever it might, that body of water it might be back there. So what that AE means is that a portion of that lot is in that lower floodline area, but maybe the home is not touching that, okay? So in a situation like that, when you're getting a mortgage to purchase that home, the ultimate authority is going to be your mortgage company, whether you'll be required to carry that flood insurance or not. Just keep in mind, they're very conservative because the home is collateral for the money that they're loaning you to purchase that home, so they want to make sure that you're fully insured should there be any kind of loss and they could be made whole. So chances are you will be required to carry it if it is an AE plane, but the good news is that it's actually more affordable than if it was a full A or worse floodplain. So it's more affordable to carry insurance if it happens to be an AE and your mortgage company requires you to carry it. I just mentioned an A plane. Now there's hundreds of different types of A plane, but if it comes back and it's an A plane, you will need to get an elevation certificate for that home to be able to get a good solid flood insurance quote, and that will be required. Okay, we can guesstimate, but when we guesstimate, it usually gives you the worst case scenario, and that can be kind of scary, and I don't want to scare anybody, even though it's Halloween. But no,
there's ever a time to do it, that's now.
Right. But honestly, I don't like to, I don't like to stab in the dark. I really would like to be able to give you information that you can run with and have the confidence to move forward and enjoy that home in the future. And then, of course, my very favorite is an X-plane. Everybody's in at least an X-plane, Dan. Everybody in Florida is on at least some kind of plane, and an X-plane is the least risk. Now, this doesn't mean that flood insurance isn't available to you. It actually is, and it's very, very inexpensive. It's also very specific in price. So if you have a home that's $218,000 for the dwelling value to insure, you can only buy up to $200,000 in insurance for that home for flood, okay? Whether you want contents insurance or not, it's up to you. You don't have to carry contents insurance at all in a situation like that. But if you're very conservative and you'd like to get, a flood insurance policy, even though you're in an X-plane, it's absolutely available to you, and it's very inexpensive to have.
But if you're in an X-plane, you don't need flood insurance, right?
Well, here's the thing. I got to tell you, and I'm glad you asked that, Dan.
Right.
I'm telling you because... I don't want to scare anybody, but I've had people that have had flood claims, and unfortunately, because they were in an plain. They thought wasn't necessary, but like down in parts of Osceola County, down in Polk, you have a lot of short-term rentals, a lot of second homeowners. These homes end up vacant for a large part of the year, and they're also very close together. So what I saw happen not long ago is there was a home that was a little higher in elevation than the home next to it, right? And they were both vacant homes. The spigot on the home that is on the higher side of that elevation, on the side of the house, burst. And so now they had all this water flowing, hit the ground, flowing into the home next to it.
And because it's starting from outside of the home, that property's homeowner's insurance isn't going to cover it.
So you see how that
Sure,
home on the bottom of that hill would have been a good idea to have even just the basic, because and just because you're limited to 200,000, even though the dwelling value is 218, you could buy 100,000, you can buy 50,000. You don't have to buy the 200,000 when it's not required to carry flood insurance. So having a little bit is good. If you're not familiar with the area, or you're new to the state, it might not be a bad idea for you to get a flood insurance policy, even though you're in an X, for the first year, because you get to see the habits of the community, the way it drains throughout the year when we have these rainstorms, whether there's water that pools in certain areas or it's not so quick to drain, things like that. It's not a bad idea to get it for the first year. And then if you, after the first year, you decide, hey, this community is awesome, I don't have any flood issues here, I'm just going to cancel the policy or just let it run out and not renew it. So that I would definitely recommend something like that.
Well, and plus there's the unknown as well. I've seen firsthand where the topography of a community, of a neighborhood changes suddenly because there's some new construction that takes place, or something unforeseen happens, maybe with a dam getting blocked up, or something, and houses that weren't supposed to flood, next thing you know, they're knee-high in water. A friend of mine, I was helping her move all of her furniture out of her house. Luckily, she was smart enough to have flood insurance. Everybody else in the community did not.
Wow.
And a bunch of us were there on flatbed trucks,
Wow.
trying to salvage as much as we possibly can, for everybody in that community. It was terrible, and everybody was shocked it wasn't supposed to happen. That entire community was X.
It happens.
Right.
It happens. There's anytime you're backing up to any body of water, I'm surprised sometimes. When I prepare my quotes and I run the flood zone determination, it comes back as an X, and they're backing up to a body of water. I'm astonished, and I will share that information with the client, and I'll say, look, I think you should get it at least for the first year, right? Because
that's really good advice.
Yeah, just for the first year, and see how things go. And if at the end of the first year you haven't had any issues, you're comfortable not having the flood insurance, definitely let it drop.
Great. Jackie, can you get too much insurance? Or actually, who determines how much insurance you need?
Well, when you call me and you give me that address, basically what I do is I run the quotes with all these different insurance A-rated companies, and within each company's rating system, there is a program called, it's called different things because they use different companies, but it's really just a replacement cost evaluator. And we have to use the information that they provide because an insurance company is not in the business to underinsure you. As a matter of fact, it's a really bad idea. You're relying on us to evaluate that home to insure it properly. So a lot of information is automatically populated from public records, from the MLS. I don't just run with that information. I absolutely review it to make sure that a lot of things have been accounted for. I always look at what the realtor provides as far as details about the home. I look at photographs to make sure that the finish grade is taken into account. Because if you've got a semi-custom home and I'm rating it as a standard home, you do not want that, because if you ever have to rebuild that home, you're going to get countertops that you're not going to like. So you want to make sure that agent isn't trying to just keep that policy super cheap for you, that they're not doing you a service by doing that. They want to make the right agent will make sure that they are using the proper finish grade for your home. Okay, and so to answer your question directly, Dan, the quoting system has the replacement cost evaluator that will specifically determine that valuation.
And as time progresses, is that updated?
So that is not updated, but what there is in the insurance policy is what they call inflation guard. So if automatically you can't change this unless you wanted to increase it more than what it already has standard. 4% is the minimum that they will increase that policy by every year automatically, whether there's increase in value or not. Okay? So they're always ahead of the game. These insurance companies are very conservative. So if anything, they're going to overinsure you a little bit rather than underinsure you. Absolutely.
Okay. How often should we take a look at our policies? Is it something we should do annually? Is it every 3 years, every 5 years?
Well, if you work with me, I'm going to tell you that if you get a rate increase of over 10%, you need to get on the phone and give me a call. Let's reshop that, because the beauty of working with me is the fact that I have so many carriers. And if we can save you money, why not? Now, saving money, something worthwhile is very relative, right, to one or the other. I mean, to me, if I save over $100, I think you should change insurance carriers, because they're all A-rated, Dan, and they're all designed to pay you. Since really we are these insurance companies are really under a lot of scrutiny with the state, okay? Because our state is so special when it comes to homeowners insurance. There's a lot of things that happen that haven't exactly been fair to the consumer. So the state has really stepped in to oversee these insurance companies and how they run their business and what they do and not do. So you've got companies that will absolutely love to keep your business and will not give you regular rate increases. There's some that may be newer in the business and start out with an introductory rate. And I'm not against that either, because, like I said, there's nothing wrong in getting a policy that is competitive in price. Just be aware that sometimes when it's really too good to be true, it's a newer company, it's an introductory rate, and then when you come upon renewal, you'll get a rate increase. And if you feel that it's too much, or you just don't want to pay that much for insurance, you call me and we'll run some more quotes for you. And if it happens to be still a competitive quote, even though you've had a rate increase, then you might want to stay. And if not, we'll move you to the next company. No worries at all.
Okay. Well, and something that's kind of near and dear to me, we run a sales and property management company here at Legends Realty. So can you touch a little bit on what the differences would be between a homeowner's policy and a landlord's policy for our investors out there?
Sure. So the major difference between a landlord's policy and a homeowner's insurance for a primary residence policy is really the personal property. Okay, so as an investor and you have a home that you rent out to others, you're most likely renting that out without any furnishings. The only things that you probably would include would be maybe the refrigerator, stove, kitchen appliances, maybe a washing machine and dryer, maybe. So those are the type of things that you want to protect yourself for any loss or theft as an investor for that property. So we usually we estimate that replacement cost for those items at about $7,000 to $10,000. If you believe that that's too low or too high, just work with us. Let us know what you feel is best, because they're not, we always try to be very conservative with those figures. But if you feel that you can get least expensive appliances, then just let us know how much coverage you need for your personal belongings. But for homeowners insurance, as your primary residence, automatically most companies will quote 40% for your personal belongings. Okay, so if you needed less or needed more, now less, there's a caveat with less than 40%, because anytime you fall below 40% on your personal homeowner's insurance policy, the coverage reverts to depreciated value. So there again, we're talking back to pennies on the dollar for your personal belongings, and they're also going to require receipts and proof that you owned it. It gets a little, they're going to push back a little bit when you have a policy that is depreciated value. Where when you have replacement cost, automatically you are able to endorse the policy with a replacement cost endorsement for your personal belongings. And that means that basically, if you bought a TV 3 years ago and you paid $1,800 for it, and something happens, you have a lightning surge, it fries the TV, now you have your TV to replace and several other items, they're basically going to say, go out and get the like item that's brand new, whatever new technology is similar to what you had before, to be made whole, and just tell us what it is and we'll basically cover you for that. And that has to do with everything else that has been damaged. So that's, you can see how that's a real value, is to have replacement cost versus depreciated value. Now, some might think, well, is the home at replacement cost or is that depreciated? Do I have to do anything to get my home insured for replacement cost? Well, not to worry. Your home will be covered. The structures will be covered. The main structure will be covered at replacement cost. If you're getting a mortgage, they require it. So not to worry there.
Outstanding. So another difference in coverage that I see between a homeowner's insurance policy and a landlord's policy is loss of use coverage. Can you touch a little bit on how that might?
Sure. So loss of use is just that. It's when it relates to an investor, someone that is renting their property out to others, it's really if there is a claim with that home that keeps that home from being inhabited. All right. So it displaces the person in it, and therefore that homeowner or that landlord or that investor no longer is able to collect rent. Okay. So they're made whole with the policy by providing the loss in rent income. All right. When it comes to a homeowner's policy, you as the primary homeowner, if you have a claim and you're not able to live in the home and you have to live somewhere else, it covers you for that displacement. So one thing to keep in mind, and I explained this to someone yesterday, as a matter of fact, Dan, is they have a home. It's valued at about mid to $100,000, and I explained to them, what you need to make sure that when you decide where you're going to stay, my first inclination is book that Ritz, right? No. This insurance company is smart to that. And so what they want is for you to book a room for a $250,000, $300,000 home. They figure something like the Hilton would be adequate. So you don't want to take advantage. Now, if you decide to book that Ritz, that's fine, but they're going to give you Hilton price, okay? So don't think you're getting too clever there. So that's how loss of use works. Now, something that most people don't know is that loss of use would also cover you if you were to be forced to evacuate your home because of a hurricane.
Right.
So if you had to go and stay at a hotel because you were evacuated, or you can no longer live in your home because the air conditioning was out and it's not going to be, the power will be down for weeks, you can file a claim for that and it will be covered.
But if you have a homeowner's policy and you're renting out the property, so you don't have the appropriate coverage, that loss of use isn't going to kick in properly, and I would imagine, right?
Are you thinking about you as the investor or that tenant?
Well, you purchase a home and you're living in it for the first couple of years, and so you have regular homeowner's occupant insurance. And then all of a sudden, for whatever reason, you decide to turn that into a rental. Maybe you are being relocated out of the area, you put it up for rent, you decide not to change the homeowner's insurance.
Bad idea. Anytime there's any changes in your household that absolutely on occupancy, call your agent, call me and let me know, because if you have a claim for something and you've got a tenant in that home and you have a homeowner's insurance for a primary resident, they're not going to pay your claim. It's a loophole that they're very quick to take. You did not inform them when you receive your policy jacket after you secure an insurance policy with our carriers. You'll receive a policy jacket that's about 100 pages long. Exciting, huh? You're going to get to read that. Anyway, it will explain to you your responsibilities and the insurance responsibilities to you. And among the responsibilities you have is to definitely let your insurance agent or insurance carrier know of those changes, because it will affect whether your claim is paid or not.
Okay, outstanding advice.
Now, you mentioned loss of use, but just below loss of use in your coverage is liability coverage, Dan. Okay. And so that's something that very few agents really stop to explain to their clients. And so I'm going to explain a little bit about how important it is to avoid a liability insurance claim. Now, liability insurance is part of the policy that pays others on your behalf. Everything else, liability and medical payments, are portions of the policy that pay others on your behalf. Everything else is designed to pay you in the event of a loss. So liability and medical pay. Liability you can is automatically available at $100,000. We very rarely offer $100,000. We like to boost it up to $300,000. Anything above that, we can buy a separate type of policy that I'll explain about in a minute. But $300,000 is the adequate coverage if you're someone that basically just owns their home and lives in it day to day, and you don't have a lot of exposures. You don't throw parties. You don't have a lot of get-togethers. You don't have a lot of people coming in and out of your home. So $300,000 is adequate. Now, where people get into trouble with liability claims is when, not even parties or things like that, it's actually when, this happens to me in my neighborhood quite a bit. Several people will call someone, like maybe someone that trims their trees, and they call them in to trim the trees, and one of their workers will go to the homes around that home and say, knock on our door and say, hey, we noticed that you've got a few trees that could really use some care. We're in the neighborhood taking care of your neighbor here. We will give you a great price since we're already here. Would you like us to take care of it? I'm like, hey, all about saving money. How much? What? That's awesome. Now, what do? You're thinking, that's a great idea. Let them do it. Don't do it. You need to ask that person whether they're licensed and insured, because anybody that comes on your property and gets hurt and they're not insured, it falls on you. So make sure that whoever you invite to come to do any work at your home is properly licensed and insured. I'm getting some work done in my home. I'm shopping for flooring, and we narrowed it down to this one gentleman. He was just so efficient and this and that, just charmed us to death. And then at the end, my husband brings me in and said, okay, I'm going to let you talk to the boss now. We're narrowing things down. And so I said, hey, Joe, when you come over to sign, when we sign the contracts, make sure to bring your license and bring your license and a copy of your insurance policy. Boo, you can hear the crickets in the background. I said, hello, Joe? And he said, I'm insulted. I said, oh, I'm sorry. What did I say? What makes you think? And this and that. I said, oh, okay. I'm sorry I offended you, Joe. It was really nice talking to you. Thank you. Click. Guess what? Don't do business with anybody that isn't licensed or insured, and it's absolutely in your right to ask for copies of that insurance policy. And not just that they hand it to you. I want you to look at the dates on that policy, because a lot of the times they'll white out the dates, okay? So it's okay for you to get a copy of that policy, call their agent and say, I want to make sure that this policy is up to date. Thank you very much. And they will give that information to you.
That's doing your due diligence. That might be
Absolutely.
one of the most valuable things you said here today. And a lot of valuable information here today.
And that's how you avoid a liability claim.
All right. Well, we got a couple of minutes. You might not have enough time for this. I don't know. Umbrella policies. What can you tell us about that?
Yeah, since I just touched on liability. Now, not everybody's a great candidate for an umbrella policy. Umbrella policies can be standalone. Some companies will allow me to boost up that $300,000 that I like to cap it at for you. But very few do, because they figured if you have that much exposure that you need that much liability coverage, then you're probably better off with another policy, a standalone policy for umbrella. So, again, it's a liability policy, what an umbrella is, and what it does, it picks up where your underlying policy leaves off. So if $300,000 on your home is not enough, and unfortunately you're in a situation where you're being sued or you need more liability coverage, that's where your umbrella policy would pick up and carry on. Now, umbrella coverage is actually very inexpensive, right? So it's not a bad idea. If you're someone that is out there in front of the public, if you like to have a lot of parties, if you just have a lot of exposure, if you have a lot of rental properties, you need to protect yourself with an umbrella policy. And we absolutely offer all types of umbrellas. And umbrella really is, the term umbrella is used because it's designed to cover you in all areas, okay? You can buy a premises only umbrella policy, which is only for the property that you're in or on or a specific property, or you can buy a general umbrella policy, which could also cover your premises and then any other properties that you might own. If you have, I've had people own vacant lots that they plan to either hold on to and build on later, or maybe just as investment. We can incorporate that too. And just remember, it doesn't cover the land. It covers any incidents that occur on that land. Hey, now that I mentioned that, I should also mention your homeowner's insurance policy. You asked me about how I determine replacement cost. Well, replacement cost is very different from what you purchase the home for, what the market value is on that home, and that appraisal that you get when you purchase the home. So replacement cost is really just covering the improvements on that land, because a homeowner's insurance policy does not cover land, okay? So it's only the improvements, what has been built upon that land, that it will insure.
So like roughly 70-80% of the fair market value, would you say? Or
you know what? It varies so much. And then that's not the only thing that replacement cost takes into account. It also takes into account what they call debris removal. So it's very likely that if something should happen to your home that is catastrophic and it would need to be rebuilt, a large percentage of that home will be left over on that lot. So it needs to be cleared so they can have a clean slate. The cost of clearing that lot will be debris removal, and it can be pretty pricey. It's usually about 10 to 20% of the cost of rebuilding that home. So you can see why replacement cost is very different, and how you really don't want to cheap out on the replacement value of your home.
Well, obviously you can see why Jackie's one of my favorite insurance people, because I mean, she knows her stuff. I mean, you got to admit that, right? I mean, we could spend another 2 hours easily going over more topics. And so if you do have more questions and you want to reach out to Jackie, I'm going to be tagging her on this post, so you'll be able to connect with her directly. Or did you want to give out any other contact information?
Well, you know, all my brochures, all my signage, everything has my direct business cell. And that's because I'm not a secret agent. I want you to have direct contact with me, to be able to answer your questions personally. When Dan refers me, he doesn't say, you know, talk to LRA. He says, go talk to Jackie Berson. So it's only fair that when you call, that Jackie Berson answers the phone.
Outstanding. All right. So I want to thank you so much for coming in today and dealing with some of the technical difficulties I had in the very beginning of this. But outstanding information. I learned a lot today. Hopefully everybody watching learned something as well. And yeah, thank you so much for everything that you do.
Absolutely. My pleasure, Dan.
All right.
All right.